Hi students, I hope you all safe and healthy with your family and friends. This video we are going to learn about 12th standard accountancy chapter 6 exercise sum number 16. Let's read the question. Manju, Charu and Lavanya are partners in a firm sharing profit and losses in the ratio of 5:3:2. Their balance sheet as on 31st March 2018 is as follows. Listen here, what they tells us from this heading. Manju, Charu and Lavanya, these three persons are partners in the partnership firm. Okay, they share their profit and losses in the ratio of 5:3:2. Their balance sheet is given below, which dated on 31st March 2018. Balance sheet has liabilities and assets, you know very well, right? So liabilities items are capital for these three partners and sundry creditors and profit and losses, and asset side items are buildings, furniture, stocks, debtors and cash in hand. Apart from that balance sheet, they have given the additional information, that is Manju retired from the partnership firm on 31/3/2018. Listen, from these three partners Manju, Charu and Lavanya, Manju retired from the partnership firm, which date dated on 31st/3/2018. Okay, subject to the following adjustment. So some adjustment is given below. Let's read the adjustment. Stock to be depreciated, provision for doubtful debts to be created, buildings to be appreciated. Okay, listen, from this information, they given the information. From this information, what they asked us to prepare revaluation account and capital account on which time partners after retirement. Which partner is retired from this partnership firm? Manju is retired from the partnership firm. So after retirement of a partner whose name is Manju, we have to prepare the revaluation account and the capital account. Okay, let's take the revaluation account. From this given information, which information we have to take to prepare the revaluation account? Only from the adjustment. From these adjustment only we can prepare the revaluation account, not from the balance sheet. Got it? Okay. Before we are preparing the revaluation account, listen. So you know very well about the revaluation account, which means ledger for the revaluation account. This is the ledger format. Prepare revaluation account means what? Prepare ledger for revaluation account. So before we are going to prepare the ledger for revaluation account, for our safety, we need to prepare the journal entry from the given adjustment. Why? Because from the revaluation account, we profit or loss from the revaluation account, we immediately, if you get the profit or loss from the revaluation account, it will be transferred to the capital account. So if you make any mistake from the revaluation account balancing figure, it will be reflected in the capital account. Okay, so every accounts will be spoiled when you not preparing the journal entry. If they not asked to prepare the journal entry, only they asked us to prepare the revaluation account directly, that means ledger account directly. Even though you can roughly prepare the journal entry, always safety for you, in just for it takes only 2 minutes. Okay, so adjustment, first entry is stock of depreciation. So stock is to be depreciated. Stock means which account? Stock belonging to asset account. So stock depreciated means what? Stock value decreased. Okay, if the stock value decreased, asset value also decreases. Whenever asset value decreases, it is to be credited. Which is to be credited? Respective asset account is to be credited. Which is the respective account? Stock account is the respective asset account. So stock account is to be credited. If the stock account is to be credited, which account is to be debited? Revaluation account is to be debited. Debtor means debited. So revaluation account debtor, how much rupees? 10,000 rupees to stock account 10,000 rupees. Then next transaction is a provision for doubtful debts to be created for 3,000 rupees. Listen, provision for doubtful debts we always deducted from the debtors on asset side of the balance sheet, right? Okay. Before that, what is meant by provision for doubtful debts? Do you have any idea about it? Listen, we know whenever they given in the question for provision for doubtful debts, 5%, 2%, 10%, whatever percentage, immediately what we do on asset side of the balance sheet, from debtors we deducted the provision for debt provision for doubtful debts. Okay, if you deducted the provision for doubtful debts, whatever percentage they given in the question, we subtracted from the debtors value decreased, right? Debtors belongings to the asset account. If the debtors value decreases, asset also decreases. Okay, so whenever asset value decreases, it will be credited. So which is to be credited? Asset related. That means the respective asset account is to be credited. Which is the respective asset account? Provision for doubtful debts is to be credited. So provision for doubtful debts is to be credited. Which account is to be debited? Revaluation account is to be debited. Why revaluation account is to be debited? Because we prepare the ledger account for revaluation account. So revaluation account, whenever asset value decreases, revaluation account are to respective asset account. This is the format. Okay, listen, I will explain you what is meant by provision for doubtful debts. Okay, let's complete this adjustment. The third adjustment is buildings to be appreciated. Okay, so building value appreciated means building value increased. Whenever building value increases, asset account also increases. If the asset account increases, the respective asset account is to be debited. Okay, so asset account, which is the asset account? Respective asset account, building account. So building account at 28,000 rupees to revaluation account 28,000 rupees. So respective adjustment, we prepared the roughly journal entry. It's take only 2 to 3 minutes. Okay, listen. I will explain what is meant by provision for doubtful debts. Listen, why we deducted from the debtors. What is meant by debtors? Why we deducted provision for doubtful debts from the debtors. Listen, who is a debtors? If you say, for example, if you run the business, you make sales. There are two kinds of sales. That is cash sales and credit sales. When you made the sales, your customer not making payment immediately, then that sales is converted into the credit sales, right? Because your customer not making payment immediately, then but your customer promised to you he will pay later. Okay, what you do immediately as a businessman, you provide the goods to your customer on credit basis for their request. Okay, so you provide goods to on credit basis, then or that means that customer is the debt, bought goods for debt. Okay, so who is called as debtors? Because he can't making payment immediately. He bought goods from you through debt. Okay, so that customer is called debtors. Okay, so while credit sales, what you do? You are making bills receivable document. In that bills receivable document, that document is the official document, your customer agreed. That means your debtors agreed. That means in future date he will pay that due amount. Okay, so you provide that bills receivable document on that future date. Listen carefully. This is the important story about the provision for doubtful debts and debtors. On that future date, your debtors not making payment, your debtors fail to making the due amount on that future due date, then that is called provision for doubtful debts. Okay, so the debt is not collectible from your debtors. That due amount means debt. That debt amount is not collectible from your debtors. So that business estimate that say for example 5% of its outstanding receivable may become uncollectible. That is receivable, bills receivable amount from the debtors is uncollectible. That is the outstanding bills receivable. Okay, so that is called provision for doubtful debts. It will be deducted from the debtors. Okay, or you got it? It is reflected as an expenses on the income statement. Listen, debtors is the outstanding income. Okay, it will be receivable, but your debtors fails to making that due amount on that due date for bills receivable. Okay, that is called provision for doubtful debts. Okay, let's go to the revaluation account sum. So in previous many videos I explained you the format of the revaluation account, first you have to write the heading revaluation account. There are two sides, a debtor side and a creditor side. Both the side we have to write particulars and rupees on both the side. This is the format of the revaluation account. What is the first adjustment? Stock to be depreciated. Listen. So stock account is, whenever stock account is to be depreciated, it will be credited. Okay, where is stock account? Credit side, on credit side. Okay, listen. You only look about the revaluation account. Where is revaluation account appear in the journal entry? Okay, where is revaluation account is appears? It is on debtor side. So you go to debtor side of the revaluation account and enter the opposite account from the revaluation account. Which is the opposite account from the revaluation account? Stock account. So we are going to write debtor side of the revaluation account, to stock account, 10,000 rupees entered in outer amount column. Why you have to enter the opposite account from the revaluation account? Listen here carefully. On the revaluation account, we preparing the revaluation account. On the revaluation account debtor side, you can't write the same revaluation account. You just enter the opposite account from the revaluation account. Okay. Let's come to next transaction. Provision for doubtful debts to be created. Provision for doubtful debts is created means it is considered as a loss. Whenever you get loss from the debtors, it will be decreased, which means it is credited. It is to be credited. So provision for doubtful debts is to be credited. Revaluation account is to be debited. Where is revaluation account? Revaluation account is on debtor side. So you go to debtor side of the revaluation account and enter the opposite account from the revaluation account. So which is the opposite account from the revaluation account? Provision for doubtful debts account. So you go to debtor side of the revaluation account, you are going to write the opposite account, that is provision for doubtful debts account, 3,000 rupees entered. The third adjustment is building to be appreciated. So building to be appreciated, whenever building is to be appreciated, asset account increased. Okay, so whenever asset account increases, it is to be debited. So building account is to be debited. Which account is to be credited? Revaluation account is to be credited. So what we look, we are only consider about where is revaluation account. So revaluation account is on credit side. So you go to credit side of the revaluation account and enter the opposite account from the revaluation account. Okay, which is the opposite account from the revaluation account? Building account. So you go to credit side of the revaluation account and write by building account. How much rupees? 28,000 rupees given in the question we entered. So adjustment related transactions we entered in the revaluation account. Okay, then what we have to do? Now we are going to find the total. How can you calculate the total? Which side we have the higher value, that side we consider as the total. Accordingly, we have to compare both the side. Debit side we have 10,000 plus 3,000, 13,000 rupees. Credit side we have the 28,000 rupees. So after comparison on both the side, credit side we have the higher value. We can find out. Okay. So that higher value is considered as the total. So we entered on credit side 28,000 rupees as the total. Got it? So the same total amount on the same horizontal line you have to enter on debtor side of the outer amount column. Entered. So we find the total. After we enter the total, we have to draw the double line. Listen, if you get the total on credit side, you will get the profit on debtor side. So based on that, you get the profit on debtor side. How can you find out the profit? We have to difference between debit and credit. Okay. So debit side we have 10,000 plus 3,000, 13,000 rupees total. Credit side we have 28,000 rupees total. We have to subtract the debit side total from the credit side total. That means 13,000 subtracted from 28,000, you will get 15,000 rupees. 15,000 rupees is called as what? Profit. Okay. So immediately you have to write against the 15,000 rupees to profit on revaluation account. After you enter the profit on revaluation account, 15,000 rupees, immediately transfer to the respective partners account, respective partners capital account. The profit on revaluation account immediately transfer to respective partners capital account. Okay, in with their profit sharing ratio underline. Okay. So, who are the respective partners? Manoj, Charu and Lavanya. Their capital account we have to transfer that 15,000 rupees with which value? Profit sharing ratio value. What is the profit sharing ratio? 5:3:2. Okay. So 5:3:2 means what? We have to add the ratio. 5:3:2 means we have to add sum of that value. 5 plus 3 plus 3 equal to 8 plus 2 equal to 10. That 10, the total profit value you have to enter on the denominator. The actual profit sharing ratio should be entered on numerator. Okay. So listen, the respective partner's name entered. We have to transfer that profit on revaluation transfer to the respective partner's capital account. Okay. How much profit we get? Profit on revaluation account. The profit on revaluation account we get 15,000 rupees. That 15,000 rupees is calculated with their profit sharing ratio. That means 5/10 and 3/10, 2/10. Okay. So now we have to cancel it. 0, 0, cancel. Okay. 15 5s are how much rupees? Listen, 5 5s are 25 5. Remaining 2, 1 5 is 5 plus 2, 7. Okay. Then 2 0 is to be added here. 7,500 rupees. Similarly, 0 0 cancel. 3 5s are 15. Remaining 1. 1 3 is 3 plus 1, 4. This 2 0 is to be added here. 4,500 rupees. Profit converted into transfer to Charu's capital account and Lavanya's capital. Similarly, 0 0 cancel. 2 5s are 10. Remaining 1. 2 1s are 2 plus 1, 3. Okay. 2 0 is to be added here. 3,000 rupees. So, we transferred that profit on revaluation value 15,000 rupees to the respective partner's capital account, 7,500 rupees, 4,500 rupees, 3,000 rupees with their profit sharing value. Okay. Then after we enter this profit on revaluation account, we made the journal entry. Listen, where you get the profit on revaluation account on debtor side. Okay. So if you get the profit on revaluation account on debtor side, what is the journal entry? Revaluation account debtor. Immediately it will be transferred to the respective partner's capital account with their profit sharing ratio, right? So it will be credited to Manju's capital account 7,500 rupees, to Charu's capital account 4,500 rupees, to Lavanya's capital account 3,000 rupees. Okay. So we entered into the journal entry after getting the revaluation of profit on revaluation account transfer to the respective partner's capital account. We prepare the journal entry. So revaluation account completed. Then come to capital account. Now we are going to prepare the capital account. What is the heading? Capital account, first write the heading, that is capital account. Capital account has two sides, that is debtor side and the creditor side. Okay. On debtor side we have to write particulars, respective partners name Manju, Charu, Lavanya. Creditor side similarly we have to enter same particulars and the respective partners name accordingly. Manju, Charu and Lavanya rupees entered. This is the format for the capital account. Always we started on capital account with the opening balance. Okay. What is the opening balance? The opening balance given in the question on liability side. Okay. Capital account. This is the opening balance of the respective partners. Manju has 70,000. Charu, Lavanya. Three partners have 70,000 capital. So we have to enter on credit side. As per the format, opening balance of the capital account always shows on credit side. How can you write? By balance brought down denoted as opening balance of the respective account. Here capital account. Okay. So 70,000 entered on respective partners column. Okay. After you enter the opening balance, immediately you have to enter the revaluation account. If you get profit or loss, it not mind it. Okay. Listen, here according to this sum, we get the profit on revaluation account. Okay. We prepared the journal entry for the profit on revaluation account. Where is the capital account shows? It shows on credit side. Respective partners capital account shows on where? credit side. Why you look at the capital account? Because we preparing the capital account. Capital account also called as a kind of ledger account. Capital account is the, we treated that capital account as the ledger account. Okay, then only you can understand easily. Okay, so if you prepare the capital account, where is the capital account? You can see that point of view only. Which account you prepared in the ledger account, on that account point of view only you can see the journal entry. If you prepare the revaluation account, you only look at the where is revaluation account in the journal entry. If you prepare the capital account, where is the capital account appears in the journal entry. Accordingly, here capital account appears on credit side. Okay, so you go to credit side of the capital account and enter the opposite account in the credit side. Which is the opposite account from the capital account? Revaluation account. Okay, so you are going to write by revaluation account. Okay, respectively, Manoj capital for 7,500, Charu's 4,500, Lavanya's 3,000 rupees. We are going to enter on 7,500, 4,500, 3,000 rupees. Respective partners column entered. Okay, then come to liability side. Okay, listen. I already explained to you in previous classes what are the accounts related. It appears on the liability side, it will be immediately transferred to the capital account. Okay, so what are the items? General reserve. If you see on liability side, that items are general reserve, reserve fund, workman compensation fund, profit and loss account. Okay, from these four items, whatever items you is appear on the liability side, it will be immediately transferred into the capital account with their respective partners profit sharing ratio. Okay, accordingly we see profit and loss on liability side of the balance sheet, right? So if you see the profit and loss account on liability side, it considered as the what? Profit. If you if the profit and loss account is appears on asset side, it considered as the loss. Accordingly, we get the profit and loss account on which is side? Liability side. So it considered as the profit. How much rupees profit get? 50,000 rupees profit the respective partners earned. Okay, so if it appears on liability side profit, if you get the profit on liability side, it will be transferred to credit side of the capital account. If you get the loss on profit and loss on asset side, it will be transferred to debtor side of the capital account. Okay, so based on this profit and loss account, this means what? Profit. So profit is to be transferred to credit side of the capital account. 50,000 rupees will be distributed to the respective partners with their profit sharing ratio. So accordingly, the profit and loss account, that means we get profit. Okay, it will be transferred to credit side of the capital account. So who are the partners? Respective partners Manju, Charu and Lavanya. How much rupees profit they get? 50,000 rupees. It will be distributed to them for their profit sharing ratio 5:3:2. Total ratio is 10. Enter into denominator. Now we have to calculate it. That means cancel it. Okay, 0 0 cancel. 5 5s are how much rupees? 25, right? 3 0 is to be entered here. 0 0 cancel. 3 5s are how much? 50. 3 0 is to be entered here and 0 0 cancel. 2 5s are how much? 10. Okay, 3 0 is to be entered. Okay, the respective partners get the profit or 25,000 belongings to Manju, 15,000 belongings to Charu and 10,000 goes to Lavanya's capital accounts. It will be that profit immediately transferred to their respective partners account with their profit sharing ratio. Okay, accordingly we transferred. They get profit. Why? Because the profit and loss account appears on liability side. So the partners get the profit. If they get the profit, it will be transferred on credit side of the capital account with their profit sharing ratio. So we have to enter by profit and loss account 25,000, 15,000, 10,000 respectively with their respective partners account. Okay, so Capital account related transactions we entered on capital account. Now we are going to find out the closing capital. How can you find out the closing capital? First, before find out the closing capital, we need to calculate the total. How can you calculate the total? Which side we have the higher value, that side we consider as the total. Accordingly, credit side we have the higher value, debit side we don't have any transactions. Okay, so credit side only we do the transaction. So credit side we have the higher value. So sum of the credit side value one by one partner. First let's take the Manju total. Okay, so sum of the value 70,000 plus 7,500 plus 25,000, you will get 1,02,500 rupees. Then Charu's total is 70,000, 4,500 and 15,000 rupees. Together you get 89,500 rupees. Lavanya's, let's come to Lavanya's value. Sum of the values of Lavanya 70,000, 3,000 rupees, 10,000 rupees, add together you will get 83,000 rupees. The same total value you are going to enter in the same horizontal line on debtor side. 1,02,000 rupees on our Manju's column, 89,500 rupees on Charu's column, and 83,000. Okay, 83,000 rupees entered on whose column? Lavanya's column. Okay. Then after find out the total, what you have to do? First find out the closing balance. Okay, listen, if you find out the closing balance, you remind your one point, who is retired from this partnership firm. Okay, so who is retired from this partnership firm? Manju retired from the partnership firm. So we leave the Manju's column. Okay, first we need to close and we need to find out the closing balance of the continue partners. Who are the continue partners? If Manju retired from the partnership firm, then Charu and Lavanya is considered as the continuous partner. Okay, so we have to find out the closing balance of the capital for the continue partner like Charu and Lavanya. So the same total value you are going to enter on Charu's column and same total 83,000 rupees enter on Lavanya's column. So we find out the closing balance of the capital for continue partners Charu and Lavanya respectively. Then come to Manju's column. Okay, Manju is retired from the partnership firm. Okay, so what is the so they didn't immediately pay the settlement, the continuing partner not immediately pay the settlement to the retiring partner Manju. So Manju's that amount is considered, how much amount they have to settle to Manju, the continuing partner have to settle to Manju 1,02,500 rupees. They not making payment, that the settlement immediately to the retiring partner Manju. So it considered as loan, Manju's loan. Okay, so that 1,02,500 rupees we have goes to Manju's loan account. Okay, why? Because if they not making settlement to the retiring partner, then that amount, that due amount is considered as Manju's loan account. That means Manju provide loan to that business. Okay, so you have to write by Manju's loan account to 1,02,500 rupees. Then that closing balance immediately brought to the opposite side and entered below the total. Okay, what is the closing balance? That closing balance is brought down. That means opening balance. Brought down means what? Opening balance, opening capital for the next accounting period for the continuous partner capital. Okay, who are the continuing partners? Charu and Lavanya. So you are going to write by balance brought down. It's denoted is what? Opening balance for the next accounting period for the continuous partner. The same 89,500 rupees, 83,000 rupees we entered. Listen, do you have any doubt from this question? Please comment it in the comment box. Thank you. Take care.